Welcome to Macro Crazy, where we talk about macro trading and speculating in general. Hope you find a fun place to talk about it here. Anyway, let's talk about what happened earlier this week. Market was bullish to start the week, thanks to the RBA, who indicated basically that they're close to the end of their tightening cycle, if not already there. That gave traders a reason to bid up the markets, bid up everything basically. OPEC gave another reason. They're cutting upwards of 2 million barrels out of production, and that pushed oil prices substantially higher. So basically everything was bid early in the week. If you look at releases, we talked about S&P PMI on Sunday night. That came in line, wasn't really market moving. ISM continued a downward trend, not a surprise, but still, there was a bullish tint to the market, so it didn't push it down, at least early in the week. Vehicle sales, I didn't see, I couldn't find. I'm not sure what happened there, so if you have that number, by all means, put it in the comments. Job openings were down bigly, over 1 million, so that was certainly an issue of concern. Maybe another reason to bid up stocks because maybe the Fed will pivot or whatever their hope is. Quits continued to be high, so that could be indicative of a continued hot employment market. ADP employment supported that and basically was better than expected. So again, that's bearish, and maybe that helped push the market back down from its highs, and another indication that there's a downward bias to the market. I'll leave that for you to consider. But moving on to Tuesday. As far as Tuesday goes, I think, it was pretty clear there's a bunch of Fed speakers all week long. There were job opening number that came in more than 1 million less than expected. So an indication that maybe the last pillar of the strong economy is going bye-bye. Have to see, but consumer staples may have rallied on that. I'll provide a review Friday night on the macro effects of this week. Quits remained pretty high for where we are in the economy, or maybe that's appropriate. If the economy is weakening, it should be going down. We'll see. Factory orders was kind of a nothing number. I mentioned the employment report for ADP, stronger than expected. We'll see if that holds up. Trade balance is really a nothing number. Services number for S&P was a nothing number. ISM services, it wasn't really a market moving number. And, Fed speakers I mentioned, I don't think they drove any of the action this week. As far as Thursday goes, we had the volatile jobless claims number, so who knows what the impact of that will be. Continuing claims, of course, bunch of Fed speakers. Friday's the big day of action. Got the payrolls number. If the number is very bad, obviously the market will rally, expecting a pivot from the Fed sooner rather than later. If it's real strong, that would be big time sell-off. Market will get hammered. In between, who knows? Bias, I think, is to the downside, but we'll have to see. Also, you'll get the unemployment rate, average hourly earnings, so indicative of inflation, how hot it is. Bunch of Fed speakers, and kind of a nothing number that might be interesting is the consumer credit number. Consumers appear to be spending more and more money from wherever they can get it to try and stay afloat in this inflationary economy. How sustainable that is and how long that's going to be able to carry forward, unknown. I'll post again on Friday night, so I hope you have a good trading week. Talk to you then.